What's going on, YouTube fam? This is the Wealth Investing Network. We do this for the win. You're getting a sneak peek into my stock portfolio and a sneak peek into my research on stocks. Today, we're talking about FuelCell Energy because they just reported earnings today. We're going to compare them to Plug Power, and this earnings report had potential to be huge news for this stock and for this company that is a play in the hydrogen economy. And if you're here watching this video, I want to assume that you already know enough about the hydrogen economy and about this company. If you don't, I highly recommend that you check out some of my previous videos because we've talked a lot about these companies before, comparing FuelCell Energy to Bloom Energy to Plug Power. We've talked about Ballard Power and so much more. So please feel free to pause this video, get caught up a little bit because I want to move quickly here. I'm leaving links in the cards and in the description for you. And while you're checking out the description, please hit that like button, turn it blue, comment, subscribe if you haven't already because it helps the channel grow and that helps me provide better content for you. That's a win-win. And we like that here at the Wealth Investing Network. So we know that FuelCell Energy is one of the companies that delves into hydrogen as an energy source. We also know that they're not yet zero emissions. They're operating in this blue hydrogen territory. We also know that although FuelCell Energy is a player in the space and their stock price is low, we know that their market cap is very high for what they do. We know that they're diluting their shares like crazy. We also know that they're under investigation for taking a PPP loan. This is a company that needs money. We figured out ways to make solar and wind cheaper, so much so that they're actually really viable now. Hydrogen's not quite there yet. And so we have a lot of bears here. And I do agree with some of these arguments. I mean, we'll get to their revenue in 2020 now that they've reported earnings, but it's definitely less than $75 million and their current market cap is in the billions. I think it's upwards of $5 billion today, but it's hard to keep track with this stock because there's so many price moves and they dilute their shares very often. And that's because renewable energy is hot right now. I've definitely seen this stock jump more than 25% in a day. And at this point, a lot of it is hype. I personally don't plan my investing strategy over what the US government is doing, but a lot of people do. They call it a Biden boost or a Biden boom, and you can find FuelCell on a lot of lists that are supposedly going to benefit from Joe Biden being president. But onto their Q4 earnings report. At the end of the day, is this company making money? Well, no, they're bringing in revenue. They brought in about $17 million in Q4, but they brought in a huge loss, pretty much double the loss of what some expected. But jumping into Robinhood, you can see it only hurt the stock for about an hour. It also brought down Plug Power for maybe about 30 minutes. So for me, this just kind of confirms who's in the driver's seat here. It's the bulls. What the analysts say doesn't matter that much. The fact that they're missing on earnings doesn't matter. The fact that they're under investigation doesn't matter. The fact that they're trading at ridiculous multiples doesn't matter because they are hydrogen. I'm going to be setting stop losses on all my renewable energy stocks because this can't last forever, but I don't know, we'll see. But maybe at some point, I think that if there's some bad news, then some of these analyst reports will get amplified because many analysts believe that the stocks have run too far too fast. They're trading at ridiculous multiples when it comes to price to sales, price to book. In this market, sometimes analyst price targets can make a stock move in that direction. I think it was an analyst from JP Morgan that set the price target for NEO around 40 and it reached that in like a month or two. Well, JP Morgan actually downgraded FuelCell Energy to a $10 price target, which is about 30 or 40% lower than what it's currently trading at. Okay, but look, I'm not here to be all doom and gloom. I'm actually invested in a couple of these hydrogen stocks. And one thing that concerned me as an investor is that these companies have been using investors as their piggy banks and diluting the shares. Ballard Power sold almost $500 million worth of shares. FuelCell Energy sold $91 million in shares in September and then $224 million more in December. And Plug Power sold more than $1 billion in shares. Now, I'll leave a link to this article. Generally, this is not a good thing. I was concerned when I saw this. And investors should still be concerned if you don't trust management to use the cash wisely. They have a much better balance sheet because of what they did. And since they're all doing it, Bloom Energy's probably going to do it too. And so can these companies use this money to make their business better? And I want to show you specifically with FuelCell, this isn't a normal thing, them selling a lot of shares like this because they just haven't been able to. Now that they're able to, I mean, their shares outstanding just went up astronomically. But hopefully all that cash will help them to be able to meet their analysts' expectations in 2025 when they're expected to hopefully be profitable. Speaking of meeting goals, we're very close to a subscriber goal. So I really hope that you hit that like button, turn it blue, drop a comment if you value this content, and hit that subscribe if you haven't already for that YouTube AI. It really helps out a lot. Okay, so we're gonna jump into Webull here. By the way, if you like Robinhood or Webull, I have links in the description that can help us both get free stocks if you do your research and want to try these. But as we know, FuelCell has been around a long time, since the 90s. And there's been excitement around this stock before. There have been reverse stock splits. But let's jump into this year. I just want to show you that when we're talking about momentum stocks, this is what we're talking about here. I'm going to show you the moving averages, the 20-day, the 50-day, and the 200-day. These are technical indicators that lag behind the actual stock price that can potentially show you a trend based on the past. So we have blue 20-day, red 50-day, and orangish 200-day. And as a momentum stock, this bounces off the 20-day moving average or somewhere near it, as long as there's positive catalysts. If there's a negative catalyst and it starts going below these, that's where I would get more worried, but it could also happen very quickly because the fundamentals do not hold up this valuation. Similar story with Plug Power. It's all fine and good now that they're well above these moving averages, but things could change quickly, and we'll jump into the fundamentals and you'll see why I think it's best to really be careful with these. So this is my analysis based off rough estimates and what I can find. I think it's interesting to compare it back to my first video where I compared these two stocks. I highly recommend that. But we have the stock prices, the market cap. Plug Power is obviously the much larger company according to the market with a plus $30 billion market cap compared to FuelCell Energy, which is around $5 billion. I have their shares outstanding here, but these go up and it's hard to keep track. Their PE ratios are negative because they're not bringing in positive earnings, but they are bringing in revenue. As you can see, you're paying a multiple in terms of the price of sales of over 70. You want this number to be as close to 1 as possible, but these multiples are pretty ridiculous at this point. FuelCell Energy made about $70 million in 2020. Their market cap is over $5 billion. Yes, you pay a multiple for growth and these companies are growing, but they're not growing this much. Their net income margins are not great. Their balance sheet is great. Current ratio means your assets over your liabilities, and this is getting much better for these companies. Plug Power will be profitable sooner. I am long Plug Power, not FuelCell. Their revenue growth figures for next year, for 2021, aren't super impressive, and their analyst target mean prices currently don't have upside. Plug Power has a little bit less risk than a lot of the other hydrogen stocks because they have a lot of backing behind them. SK Group in Korea is taking about a 10% stake, which is a good sign. They extended their partnerships with Amazon and Walmart, and I believe they also offered them warrants, so Walmart and Amazon are going to be investors. FuelCell also has some large companies and institutional shareholders, but I would say BlackRock would be more likely to sell if the stock started going down. Frankly, I think these hydrogen stocks are risky in general, but a good way to cut down your risk is to set a stop loss for whatever you're comfortable with your risk tolerance. For Plug Power, I think if they drop more than, 10%, 12% in a day, I think I'd feel more comfortable if I had a stop loss to back me out of it in case it went down even further. So I know I keep saying over and over again how risky these are and that it looks like these stocks could come crashing down. And I've talked about the history with these stocks and how Plug Power and FuelCell Energy crashed in the early 2000s. But I also think it's more comparable to 2008 when there was a lot of hype about what a new president might be able to do for solar, and then that came crashing down. I want to make a separate video about that. But based on my initial research, I think First Solar is one of those companies that was trading at a ridiculous multiple in valuation, and then it came crashing down because the fundamentals didn't hold up. So just keep that in mind. I'm also long Bloom Energy, and I'm setting a stop loss for them as well, because even though I like where they're sitting with their market cap compared to the revenue they're actually bringing in, more than double the revenue of Plug Power. You can check out my videos on Bloom, but suffice it to say, they're not trading at a nosebleed multiple because they actually got hit by a short seller report in 2019 that brought the stock way down. And this company has a lot of debt, so there are risks there as well. But just keep some of these things in mind. I mean, it's really the bulls versus the bears here. The bulls are in full control right now. But if there's any negative catalyst with some slowdowns with the government, maybe a Biden version of a Green New Deal isn't going to happen as quickly as expected, or it's not going to come through with stimulus. These kind of things could be negative catalysts that could send all of these stocks down quickly because they kind of trade together. But I'm interested to hear, what are you doing? I'm really curious to see, and I want to get this video up before the market closes. So like, comment, subscribe. I'm going to go plug in my laptop battery. It's definitely mad at me right now. See you in the next video. Thanks for watching.